Well, welcome to the deep dive. I think it's ready, time for us to get started. So welcome this morning for the deep dive. If you saw the update, we're going to do an interest rate update deep dive this morning, give you all the information going on with interest rates. So we're going to do that here in just a minute when we get started. But as always, glad to see everybody that joins us on this Monday morning, every Monday morning to start their week. With the deep dive. It's January 24th, making our way through January. I mentioned we're going to do an interest rate update, and I'm not saying that interest rates are going to certainly shift the market, but here's what I am saying this morning is when interest rates start to rise, that causes concern for buyers and for those in the market. And our job is to be able to have the answer for what is happening. And that's my goal over the next 10 or so minutes, is to give you those answers. I would say the two biggest issues right now in real estate are interest rates and inflation. Many people wondering, how is that going to impact my home buying purchase? How is that going to impact the market? Maybe many of us in the business wondering what's going to happen there. I would say if you're watching this morning and so many people joining, tag somebody in your office, tag somebody in the business you've been talking to about either interest rates or inflation. I'm not going to cover inflation this morning. We've done it before, but I'll bring it back to a deep dive if there are folks that say, hey, let's talk about inflation. I'm getting that question, so let me know if you are hearing about that. But what I am saying is these things arise as they become issues, they become concerns for buyers and sellers, and we want to have the best answers in the market. So let's go ahead. Let me share my screen here and we will get started. So I'll start off here with really, kind of the benchmark we look at, the Freddie Mac weekly interest rate monitor, the average 30-year fixed right now at 3.56%. If you think about this, we started the year right at about 3.1%, and now we're up over 3.5%. Sam Cater says this: mortgage rates moved up again as the 10-year U.S. Treasury yield rose and financial markets adjusted to anticipated changes in monetary policy that will combat inflation. I'm going to come back to the 10-year Treasury in just a minute. But as a result of higher mortgage rates, purchase demand has modestly waned in advance of the spring home buying season. However, supply remains near historic tight levels and home prices remain high, keeping the market competitive. I think as interest rates rise, we're going to see a lot of folks make different decisions. Many people saying, hey, we want to, it sort of spurred us on further to see if we can go ahead and find a place now, get in while we, can get a better interest rate if they continue to rise. And that's going to be the question certainly that many folks are going to have. If we look at this graphically, I always like to go back to these graphs and show you where we're at. So as of today, or as of last Thursday, 3.56, the average 30-year fixed as measured by Freddie Mac. And many of you watching, maybe there's lenders watching, maybe you're talking with a lender right now, or your lender partner's like, it's higher than that. Many different people average or monitor the 30-year fix. You're going to see variances in the different averages. We use Freddie Mac, and there are others as well that you can use. But here's the bottom line: the price for financing a home is going up. Okay, we've talked about this for the last several months at Keeping Current Matters. Certainly on the deep dive, we've done this. If you think about this graphic right here, this goes back to the beginning of 2020, and you see this kind of U shape as we went through the pandemic, and now we're coming back up. If we were to draw a line where we've been going back to 2018 at 3.56, we're about right where we were when we started the pandemic. So if you look at that line, go across, look at the beginning of 2020, things started with the pandemic around that. Actually, the lockdown started in March of 2020, about that area, 3.5%. If you watch the deep dive, for the last 10 years, really from 2010 to 2020, we hovered somewhere between 3.5% and 5% in the average 30-year fixed. Where are we going? Back to where we were. We're going back to where we were over the last several years in financing for home loans. I want to give you a little bit more perspective from Sam Cater. He says, as mortgage rates rise, we do expect some moderation in housing demand, causing house price growth to temper. However, the combination of a large number of entry-level home buyers facing a shortage of entry-level inventory of homes for sale should keep the housing market competitive. In 2022, we expect purchase originations to grow from 1.9 trillion in 2021 to 2.1 trillion in 2022. Pause right there. What he's saying, we're going to sell more homes in 2022 than we did in 2021. Purchase demand growing. while refinance activity is anticipated to decrease from 2.7 trillion in 2021 to 1.2 trillion in 2022. So as you're starting to read, as maybe you're working with people and they hear about the mortgage market constricting, that is all due to refinance volume, not purchase volume. Purchase volume is forecasted to grow this year over last year. What's going to massively constrict is refinance volume. Why is that? Because everybody refinanced at 2 3/4 or 3% or whatever they refinanced at, and now interest rates are rising. So keep that in mind as you have your expert opinion about interest rates. You know, the reason I do this on the deep dive is because this question is going to come up, and there are going to be one or two sort of answers. The first answer is going to be, well, they're going up and I don't know what's happening and we're just going to have to wait and see. Or you have the expert perspective using all of this data, all of these insights that we bring to you to be the educator in your market. So notice that as you start to hear more about originations constricting. But if we were to compare this rate to the last 5 decades, we still look really, really good for the average 30-year fixed. The average 30-year fixed over the decade of the 2010s, 4.9%. Now, we're going to certainly knock on the door of that in the foreseeable future. I didn't bring this morning forecast for where you know folks are looking for us to go this year because they haven't all been updated, truthfully. But the ones that have been updated showing us, you know, getting closer to 4 by the end of the year. And so, you know, if we look at this, I think this is a really good perspective to use with your buyers right now, still in a really, really good market for financing right now. You look all the way back over the history of mortgage rates and averages, and we're still in a very, very good position right now. Now, I want to talk about the 10-year Treasury. That was the line in the first slide that I used. I'll go back to that if you missed that. Right here, it says mortgage rates moved up against, again, as the 10-year U.S. Treasury yield rose and financial markets adjusted to anticipated changes in monetary policy that will combat inflation. First slide that I used today. Here's what I want to tell you. Certainly not saying, you know, as an agent, you need to become an expert on monetary policy and what drives interest rates, but this is what you want to look for, and here's how you want to you coach your clients. You hear more and more information about the 10-year Treasury, okay? So I want to give you perspective on what's happening with the 10-year Treasury. This is a look going back to December 1st, okay? So just 2 months ago, approximately. The 10-year Treasury is going up. Why is this important? This is important for this point right here. This is the educated perspective that any of us need to have in the market. And it's this: for almost 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury rate. Okay, so we want to watch the 10-year Treasury, and we want to say, well, here's what I know. For the past 50 years, the 30-year mortgage rate has moved in unison in this almost symbiotic relationship with the 10-year Treasury. So we want to keep our eye on the 10-year Treasury. We're going to do that for you at KCM. If you're a KCM member, you're well prepared. If you're not, I would encourage you to start a free trial, become a KCM member, and use this as you're talking to your clients about what's happening in interest rates. Certainly, we can't forecast what's going to happen when or where rates going to be in the spring market or by the end of the year. We'll bring you what experts are saying. And like I said, they're in the process of updating their forecast. Those that have updated are saying, hey, we're going to be close to 4 or around 4 by the end of the year. We'll see how that plays out. But no doubt what we need to watch is the 10-year Treasury. We need to have that perspective as we're counseling those that are out looking at homes right now. I want to end with this quote here, and then we'll take a couple of questions. If you have those, put them in there. And I know Jessica's going to look at the questions there in the comments. Mortgage rates hit their highest level since March of 2020, leading to the slowest pace of refinance activity over 2 years. Why did I bring this up? Certainly, that's going to slow refinance activity. I talked about the forecast, the massive constriction in refinance activity. You know, certainly for the last couple of years, lenders have been swamped. I think this is now time, you know, to talk to your lender, have a great lender partner that you can work with those that are buying right now, And certainly those that maybe have been on the fence, now's the time to talk to them. Get them pre-qualified. Get folks pre-qualified. The blog on the KCM blog today is all about pre-qualification. Great message to get out there as the first step for those that are thinking about doing something this spring. If you need more, really resources to talk to buyers about, our Winter 2022 Buyers Pack is now available. If you're a KCM member, you get this and everything. You get the Buyers and the Sellers Pack. We're offering for those that aren't KCM members right now to sort of go in there and grab the Buyers Pack, see if it's something that helps you with your buyers. We certainly want you to become a KCM member. That gives you a chance to try things out and check it out there. So try kcm.com/buyers pack. Go there and grab that. Use that with your buyers. It's going to have everything they need to be educated on this market. I always think about these buyer and sellers pack. It's a great way to build rapport with people before you even sat down with them. So if you're thinking about sitting down with somebody or somebody's thinking about doing something, putting that in front of them, letting them educate themselves, and sitting down saying, okay, let's talk about what was in there. Let me give you perspective on what's happening right here in our market. You bring your local information, you bring everything happening that equips them to make a powerful and confident decision in today's market. So we're gonna take a few questions. Jessica, if you have those questions, let me know if they are out there. I know we've got a lot of folks on here watching, and Jimmy, you asked, I'm just looking here in the comments. We covered inflation previously. Where can we find? I covered inflation several deep dives back. If you're a KCM member, you log into my KCM. On the left side, you'll see the archives for the deep dive and for previous webinars and monthly market reports. It's in that section. You'll have to scroll back. But I talked about inflation, a homeownership as a hedge against inflation. It's a really good deep dive if you need some historical information about inflation and how it's impacted the housing market, and to give the best advice to your clients. So go check that out there, Jimmy. Jessica, we have any questions out there?
Dave, the only other question I see is from Sherry, who asked, are the slides on the KCM dashboard?
They are. If you log into my KCM, on the left side there, Jessica, what's the little area? It's archive, where the deep dive's archived?
Yep, it's called the Deep Dive Archive, and you'll be able to view today's replay and all the slides from today.
Perfect. Those are all in there. Great questions as always. Thanks for asking those questions. Thanks for making the deep dive a way to kick off your week. Go in there and look at the archives on inflation. Look at the archives that we've done in past deep dives, whether it's myself or Kate. We do this every Monday morning at 11 a.m. Eastern. Love to have everybody on. Thanks for joining. Go grab the Buyers Pack if you're not a KCM member. And listen, if you're not a KCM member, go start a free trial today. So have a great week, and we'll see you back next week on the Deep Dive.